People are joining every now and then. But yeah, let's start because it's already 1 o'clock. So I hope last week webinar that we have done on the basics of FX, I've covered a lot actually. So today I will probably start discussing on fundamental analysis, which is I think very important for the trading point of view, right? So that people who wants to trade through the chart and try to understand the chart, those people will actually understand the chart very well. That will help you to further enhance your trading activities. So, and I will try to recap as well a bit so that people who have missed last week can quickly just recap on everything, and then we can take it from there. So we go back and first I recap quickly, then probably we'll start. So last week I have covered on unrealized profit and floating profit and loss. So just a quick one. Unrealized profit are those profit basically your current where your trades are actually active. So that when you open a trade and you have not closed it, it's still floating, and it's unrealized profit. Floating profit and loss, on the other hand, is completely different thing in a sense that you calculate the profit and loss with a different um, formula. So unrealized means just to categorize both actually. Unrealized profit basically is it's still open and the profit and loss is moving up and down. Either it is in loss showing either it is in profit it is showing to you. Because you have not closed the trade, it is still uh, showing as unrealized profit and loss, right? Floating, on the other hand, is similar to what unrealized profit and loss is, but we call it on the other term as a floating loss or a floating profit. So unrealized P&L basically is then subdivided into two parts: floating loss and a floating profit. So if your trade is in loss, showing loss, which is unrealized, but it shows a floating loss. On the other hand, second part is unrealized profit, but which is still in floating profit, it termed as a floating profit. Right. Margin, as I explained, margin is nothing but a small amount of capital which is required for any trader to open a trade. Okay, that's the beauty of FX, where you have to put, every broker gives a set of margin on every single product, right? And based on that, you then decide how much trade you want to take. So for example, in currency pairs, normally majority of the brokers give 1% margin. So that means you are actually depositing 1% of the contract size, right? 1% of the contract size, and the rest you get a sort of loan on the platform. So if you are buying a contract size of 100,000 euro against dollar, that means you are not actually putting $100,000 to buy euro against dollar. You are only putting 1,000 euros, that is 1% margin, to buy 100,000 contract of euro against dollar. Okay, this is not a transaction fee; it's just a capital requirement to open a trade. Required margin is what I have explained last time, is a set of margin which is pre-described by the broker. So for example, if there's a two, as you can see from the graph, it's a 2% margin requirement on currency. That means if you want to open a trade of $100,000, then you have to pay $2,000 as a required margin. Okay. If you are taking a mini lot of $1,000, then you have to put $200 as a required margin, and then 1,000 against 1,000 contract size, you have to put $20. So this becomes as a required margin. Margin calculation I've also explained, which is a key. You all have to keep it in your mind so that you understand how the margin is calculated. Simple margin is 1 divided by the leverage. So whatever leverage people are giving, divided by 1, right? So it's 1 divided by 100. is 1 is to 100, 1 divided by 50, if somebody is giving you 1 is to 50, and then you understand how much margin is required. Used margin is the one that when you open an account, open a trade, sorry, and you already bought a position. So for example, you have $1,000 account, and you open two positions, right, of say 10,000. That means whatever margin is required for opening these two trades, that margin has already been consumed. Why? Because you opened those two trades. So now it is a used margin. Okay, so the used margin will tell you how much margin left in your account to open further trades. So this is a used margin. These are the examples that I have quoted to you. Equity, as you can see, what equity, and there's one thing called balance in MT4, then there's an equity in MT4. So accounting equity, or simply equity, represent the current value of your trading account. So whatever trades you have already opened, if the trade is in positive, then your equity will go up more than balance. If your trade is in losses, then your equity will come down, right? So this is what the equity is. So the formula for equity is the account balance plus or minus the floating loss, shows you the equity. So if your balance is $1,000 and you have two open position with $200 floating profit, then your equity will become 1,200. Okay, so that's your equity. On the other hand, just to simplify it, if you have a losing trade, then your equity will of course go down. If you have a positive trade, your equity will go up. Margin level, as I said, margin level is also plays a very important role, because normally you don't have to calculate margin level, because system automatically shows you margin level in MT4. So you know that how much margin level is required. When the margin level hits 100%, that means you have no balance left and your position will start to end. So you always have to keep in mind that if the margin level is above 100%, so 120, 150, 200, 300, 400, that means you have enough balance left in your account to open more trade. So to calculate margin level, you have a simple formula, which is your equity divided by the used margin. So whatever is your equity and whatever the open positions are there, and the margin is consumed by this open position, you divide it and then you multiply it by 100, will give you the margin level. Okay, so you here in the graph you can see margin level, how it calculates 100%. If any point of time when you are opening multiple trades and your margin level is coming closer to 100%, that means you have to inject more funds to either carry on the positions that are currently open, or if you want to open more trades, then also you have to deposit more funds so that you can increase your margin level in order to open more positions. Stop out level is, so margin level call comes at 100%. So once the margin level reaches 100%, you start getting a margin call. And at 50%, for example, it depends from broker to broker what level of stop out level a broker has set. So if the margin falls below 100 and comes to 50, that means your position will start to square off, and that will be the stop out level. Okay, and automatically the system will close the position. Many people all face this problem because they think it's a system glitch, or it's what MT4 is doing. Is not the case. Is what people have a lack of knowledge to understand what is a stop out level. So stop out level means that if margin falls below 100% and it comes to 50%, right, the system will automatically start to liquidate your current open position. Okay, because you don't have enough capital left to cover the market. If the market is going against you, okay, that means it is consuming more margin, more capital, and you don't have enough capital. Why? Because you have opened 10 trades with $200 account, for example, and all the trades are running and the market is very volatile and market is moving, and it is actually consuming the capital. Because if it's going into a losses, what happen is, in the losses side, market is going against you. That means whatever you have invested, it is going below that investment, so it is consuming from your current capital. Okay, if you don't have a capital left, then what system will do? System understand that he doesn't have a capital, so first liquidate the bigger position, because those bigger position are taking more margin. than the smaller position, and then start to liquidate from bigger to smaller. Now today we will discuss about the forex market analysis. I think very important factor that everybody looks forward to is the forex market analysis, and I think analysis plays a very important role when you are actually trading in FX, and you are not a trader, and you have a sort of a knack of learning FX. If you want to learn FX, how you will start to trade, there are three key fundamental analysis that, or rather I should say there are three key market analysis that everyone should be looking to. Then only you will be able to trade in FX. You cannot just, no one just simply come on a platform in FX and think that FX is, I know euro dollar, I can see one buy price, I can see sell price. And as soon as I click on buy price, the trade comes in and you see profit, because you don't know, this is just a betting sort of you have done, because you don't understand. Every financial product needs a market analysis. If you are trading in euro dollar, you will understand that what are the factors which influence the dollar, what are the factors which influence euro, what are the important elements in the market which strengthen dollar position or weaken dollar position, and vice versa, right? So these type of analysis very, because when you understand the movement of the currency, which is depending on different segment of the market. If you refer back to my first uh, basic webinar that I started, I said it's very, very important that when you are trading in FX, the important thing for everyone to understand is what are the factors that are associated with the movement of any particular currency. That can be anything. Example, elections are around the corner in US. There is so much movement going on. There are people who are pro-Trump. There are people who are in favor of Trump, right? Uh, and then what happened is the whole economy is affected by a big move in the election, because in any country when the election happens, people know what the previous government has done, right? If the previous government has not done anything good for the country, for example, there is higher unemployment ratio, of course, more and more business is needed to create jobs. That means you have to actually invite a lot of people and sell the stuff cheap. Then only the foreign direct investment will come in the country, and that weakens the dollar. If the employment ratio is good, if there's a lot of FDIs, which is foreign direct investment, is done in a country, then when the value of the currency is very strong, and then based on that you take a decision whether I want to buy my currency or I want to sell my currency right now, right? It depends on the market analysis. So those are the very important factors that everyone has to understand. And to become a good trader, trend analysis of any particular product is the key to the success. Trend analysis everyone should do. It's not a rocket science. It's not a very tedious job. Yeah, it sometimes becomes a little bit cumbersome, sometimes becomes a little bit more time consuming in the beginning when you are actually trying to get in deep into it, but it works. So after election, for example, in US, whoever will become the president, whoever government will come into place, they will have their own manifesto, and their manifesto describes how the currency will fluctuate in the market. Maybe they have got some better plans to strengthen. Maybe they bring some rail project, employment projects, infrastructure project. Maybe they lower down the inflation, they combat the inflation, and that will actually help the currency to become more and more stronger. Right? And that is what every trader wants to understand. So the best part of the trading is you always pick any currency pair, any commodity, any indices which you feel that this is important, which you feel that yes, this is where I want to trade. So it's not like you, nobody is a perfect trader in every currency. Okay, nobody is a perfect trader in any currency. So it's always recommended that when you come into trading, if you want to trade on your own, always first start with one currency pair, which is very easy to understand. Okay, where where you will basically understand how the trend will go, right? Where you will understand what are the market factor which actually impact the currency. And once you understand the inside out of that currency pair, you start building your confidence around it, then you will start working. Coming back to the Forex market analysis, there are three types of market analysis that every trader does before doing a trading. And what are those three market analysis? It's a technical analysis, fundamental analysis, and sentiment analysis. Three things that prevails in the market which affect the trade. So these are the three things that we will study today in this webinar, that how these technical analysis can be understood, when you are actually trading, what technical analysis is required. The technical analysis will tell you the trend of the market. Through the chart, you will understand what are the highs and what are the lows, and how you study those highs and lows on a chart. Then you can understand where the market is going and what will be the next move of the market based on the technical analysis. Fundamental analysis, as it says, depend on the market news. So it depends on any currency pair that you pick up. It tells you the economic factor, the geopolitical factor, the economy of that country, the movement of the in that country, political, economical, whatever you call it. All those are the fundamental analysis. And then the sentiment analysis. Sentiment analysis is the analysis of a trader, which side the market is standing. So if you go to any crypto exchange, you see if the Bitcoin is moving up, 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 up. So what will happen? There will be more seller than a buyer, because now people who are previously holding Bitcoin wants to sell the coin because the price is going up. So the sentiment will be more on the selling side than the buying side. If the currency is getting weakened every day, and people understand that it will take a U-turn, then the sentiment analysis will be more on the buying side, because it's the right time to buy uh, pound against dollar, because dollar is weakened at the moment. But eventually, when something new will come, the dollar will start to move up, and this is the time when I will make money. So then the sentiment will be on one side. So technical analysis is a framework which normally traders study for the price movement. So what is the theory? The theory is that a person can look into historical price movement, determine the current trading condition and the potential price movement. Okay. Someone who has a technical analysis is also called a technical analyst, right? Anyone who understands the technical part is considered as a technical analyst. There's so many technical analysts these days. You see on a Bloomberg, there are a lot of technical analysts. Their job is to only work around the technical understanding, or the behavior of that particular product or currency pair or whatever you're trading on. Technical analysts only focus on one or two pair, two product. They do a deep dive into that currency pair, trying to understand each and everything that affect the movement of the currency pair. And then they come and give their technical analysis to the audience and say, look, this is what I feel, and this is the bearish trend or a bullish trend. So wherever you want to go, rather you take bearish, follow the bearish trend, because market is actually quite volatile, right? That's how the technical analysis always comes into it. Right. And technical traders generally describe to believe that it is all about the chart. If you meet a trader, any trader you meet, you will always see that a trader always always talk about the chart. because he doesn't believe in any other thing. He only look at the trend, right? He only look at the trend. So the chart itself gives you a trend analysis, where the market is going, how many times the market was low, how many times the market was high. And then based on that, he does his own technical analysis of how many high, how many high low, and based on that candlesticks, it then decide where the market, where the trend will go, whether the upward trend or a downward trend. So they always believe in the chart. They don't look at the price movement here. As you can see, nobody looks at the price movement here. People normally look at the trend, because this actually simplifies everything. If you can see the trend, like you can go back as much as you can, and you can actually see the whole trend of where the market. So I'm having a euro dollar chart open, and I can see, from if I want to see 3 months chart, I can see the 3 months chart going back, and I can do a proper sitting down and doing a proper technical analysis of how the market behaved in the last 3 months, whether the euro dollar was on the sell side most of the time, or euro dollar is on the buy side most of the time, and what will be the next move of the euro dollar, depending on which side of the trade you want to go. You want to focus more on dollar, either buying dollar or selling dollar. Then of course you look at the technical chart trends, then you look at the fundamental analysis of what is happening around it, that might affect the further movement of the dollar. And then based on that, you actually take the trade. So that's very, very important for anyone to actually, and I think I recommend that each and every one of you who's listening will always look into it, the chart. Try to understand the chart more closely, because chart is the heart and soul of the trading. Basically, you can say you will not get data for any other price movement. You can only understand the trade through the chart movement. Okay. And what technical analysis does is, basically technical analysis look at the rhythm, right? Rhythm. They look at the flow, the trend in price action. What was the trend in the last 3 months? What was the trend? You can and some traders have different time intervals to look at, right? For example, here you can see I can look at the trend as a 1 minute chart, because I'm a swing trader. I'm a very fast decision making trader. I always look at a 1 minute chart, and I look at the trend, I look at the rhythm, I look at the price action, and then based on that I decide what I want to do. Some are different. Some are day trader. They look at 15-minute chart, they look at 30-minute chart, and they see how the trend in the last 30 minutes moved. Or some are even, you know different traders. They are called as an opportunist trader, because they always look at 1 hour chart, and they look at in an hour what is the movement in euro dollar. So the hour chart gives you a full summary of what happened in the last hour in euro dollar, what trend was it following, what rhythm it was following, where the market was going, and then based on that they understand that what will happen in the next hour and so, and then based on that they decide how they trade, right? And as you look at the chart here, you can see that just a snapshot which is trying to show you where the market goes and where the market will go. Okay, so this chart, as you can see, what they say, the price has trouble breaking these levels. So they always look at the high trend, where the two big candle has touched the most, the highest they have been. Okay, so they always draw a line on that highest peak. For example, if I look at the chart here, and if I go to, say, a 5 minute chart, then either I pick up the buy trend or I pick up the sell trend. If I pick up the sell trend, I will say that in the last hour, I think this, you can see that this two candle has touched, right? And then I will see that on the bottom side, the candle has not matched except these two, right? But the candle has to show like this upward trend. So you draw a line on the upward trend, and you see that how the market has gone in between. Likewise, it always show you the downtrend as well, that how the buy pattern, where what level it touched below, and then it went up. So like this chart you see here, it is showing you the upward trend, the two top candle bars. And then what a trader does is basically he always draw a line to understand that this is the level, these two level. So at this, on this date, at this time, it has broken one level. Then on this date, the similar level was broken. That means in this is the line trend of the trade, where the movement of the trade was, whether it was on this was on the buy. So the buy gone this far and this far, and then suddenly he has seen that the trend has gone down, right? And then he has taken the two lowest bottom level, so it has broken the resistance as well. So now what a trader has is assuming that the trade will likely to go up, and probably it will touch this red line again. So trade will go keep going. So if you buy here and sell it here, so it becomes a buy trend. Why? Because now here the trade has started to pick up, and then it will touch the higher two higher candles. And this always happen, that when any product touch the two highest candle level in a buying side, right, then there's always a likelihood that the trade will come down, and at some time it will keep going down, 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 and down. But when it rebound, it will likely to go up and touch that bar again. So this is the trade that a trader wants to take by doing a technical analysis, that the rhythm shows that where the next trend will go, right? Technical analysts always use chart. That's always a question, why people do that. Because technical analysts use chart because they are the easiest way to visualize historical data. And I think historical data plays a very important role. Anybody's history gives a clear picture about that person, right? It's even in the common scenario, right? So imagine when we are trading, then the trend of a product, the price trend of a product, actually give you a full snapshot of what was the history. And from this history, some trader even calculate the percentage movement, which we call it as a volatility movement. So volatility movement basically will give you, a very clear snapshot of how what percentage of volatility is there in a product. So for example, normally what people say, in the traders say about euro dollar, that on an average around 2 to 3% per year there's a volatility in the euro dollar product. But if you talk about Bitcoin these days, Bitcoin is like as untouchable. Bitcoin volatility index is other way around than the normal currency pairs. It's highly volatile. Instead of 2 to 3% a year, the Bitcoin is actually going 20, 25%, 30% movement in a day. It swings like anything. So that means there's so much demand and supply available in the market for that product, and there are certain factors which are actually affecting Bitcoin, that is making it more volatile. So for Bitcoin, now the trader finds this quite difficult. Now Bitcoin is a product which is um, not for everyone, not for everyone to trade on, because you will not be able to understand the technical analysis of Bitcoin from the historical data, because you can see when the movement is so high in any point given point of time in any in that particular currency pair, then it's very hard for you to understand that what will be the next move of the Bitcoin, because Bitcoin is moving so fast. Sometimes it is like 20% up, sometimes it is 20% down the next minute. So the new trader never jumps into Bitcoin trading because it's so volatile. You always try to find a safe haven, a product which is very easy to understand, a product which gives you uh, which helps you to understand, the price trend. And that when you understand the technical analysis, you if you once you understand how to do the technical analysis of any on any given currency pair, then it becomes really very easy for you on a later stage to even do a technical analysis of a highly volatile product like Bitcoin. But if you don't understand the trend of the pair, which is not that volatile, then of course you are not able to trade in Bitcoin. And if you trade, you will just actually, you're not even trading, you're actually betting on it, right? You're just trying your luck out that, I just trade and see how it goes. Or you get a tip from the market saying, some people will say, oh, you know what, that's fine. The market, the Bitcoin will go up, you buy or you sell, whatever the trader will say to you, and then you react. Most of the people does like that as well. Then comes the fundamental analysis, right? So technical analysis, more or less, we have touch base. But when you come to the, as I said, when you are looking at a chart, the technical analysis is basically more working towards the upward trend and the downward trend. So technical analysis will help you to understand what will be the next trend in the market for any given pair, right? And you have to play around with certain lines and stuff like that to understand how many times it has touched down. What are the lowest, in the last, for example, say in a minute, if you are looking at, or if you are looking in a 5 minute chart, or you're looking at an hourly chart, you understand that what will be the what was the move in the last an hour, to what extent it has touched, so so it gives you a completely different trend, where because you then try to match it up with this one and say, look, this is where the market has gone to down, right? And then it started to go move up from here, and then the trend is where you will see a massive move from this candle to this candle, right? So that means the market will either go up or the market will either go down. You will be able to predict by looking at the uh, two line of resistance and support, right? So that means it has gone that down, so that means there will be a trend when the market will go similar level up as well. So you will then try to understand that what is the next move of the market, and how will I come into trade into it. So now you can see that these two candle has not made a fine candle like these two candle, because they have gone too low. So that means there's likelihood that in euro dollar the price, this will be a buy trade. So I will probably look to buy now and then sell it on later, because I think the trend is showing an upward trend. That's how you do the technical analysis. And then you always have your different set of trading analysis. I showed you last time when Eric was talking about it, the Bollinger Band, the ATA, AXT, and all those sort of charts are here, which will always help you, so to understand more and more ADX, layer, momentum, popular, volume. We will touch base on each and every chart one by one to understand how these chart work, so that you will be able to go more deep into it, and try to understand and implement it in a real time basis, when you start trading properly on the platform. Fundamental analysis, as I mentioned to you earlier, is fundamental is the way of looking forex market by analyzing different layers in the market. And I think the most important is 3-1. What are the three layers? First and foremost is the economical factor. Any product, any currency, if it's a INR, of course it's an Indian currency. If it's a dollar, it's a US currency. It's a pound, it's a UK currency. So of course the factors within the country will always impact the currency. The economy of the country will always impact the demand and supply of the currency. Like for example, you look at Syria, it's a war zone, right? It's a war torn country completely. Their currency, Turkish Syrian lira, has gone completely out of the market because their economy is crashed completely. Now nobody is using uh, their local currency because there's no economic factor left, right? Turkish lira, for example, if you look at some point of time, Turkish lira, because of they have sour their relationship with many countries. US at some point was trying to put a sanction on them, and so the Turkish lira started to come down. And then the president came forward and said to all the Turkish people around the world, buy as much as you can against whatever currency you have to push the demand up and not let the currency fall down. Okay. So that's how India again is on that verge where, for example, uh, the economy of India has gone from one level to different level altogether in few years time frame. We have seen, and it's because of the back policies, it's because of the unemployment rate ratio increasing, foreign direct investment are not coming because of various reasons, and that is affecting the currency too much. There was a time when $1 used to be around 40 45 rupees. Now $1 has gone to 70 75 rupees. You can understand that the value of the coin currency is actually depreciating, and which is putting the country in a very bad spotlight. So this economic factors you need to understand when you are picking up a currency pair to trade on, any currency pair. Then you have to understand the social and political forces behind it. What are the social forces? What are the political forces behind it that are actually pulling the demand and supply of that coin? Social can be anything, how good the environment is in a country. A lot of tourists are coming. There are more socio-economic factor working very well. You know, when the country become a tourist country, when the company is based on tourism, then you can understand. Like for example, Thailand. You see, Thailand is more like their economy is based on tourism, right? So the social and political factors are the key on driving the economic of that country. So they always welcome people from around the world because they know that this is the only way that they can strengthen their economy. More and more people will come, more and more people will sell their currency and buy their currency. So people will sell dollar, buy you know Thailand baht. India people will come sell rupees, they will buy Thailand baht. Africa will come, they will send their currency and buy Thailand baht. So that means people are buying, 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 buying. What will happen when more buying and less selling? The price is likely always to go up. That's what it means. Second part, if you think about it, this makes a lot of sense. Like for example, just like in our economic classes, if it is the supply and demand that determine the price. That we have been talking about demand and supply for many months now. For our bucks coin as well. Or in our case, the currency exchange rate. Right? So that means demand. You have to create more demand, less supply to strengthen the price or the coin value. How will you determine the demand? Is when you offer something which is very unique, very special, when you attract a lot of people to come and invest in you. That means you are creating a demand, okay, for any product. So in case of currencies, it's not a product, it's a national currency. So what countries does is basically they create demand by you know giving people an access to the country, whether it is immigration. A lot of people are coming. A lot of people wants to come to UK, Canada and US, and they want to take the nationality, and for that they have set up the criteria. You want to come here, invest this much, invest this much, invest this much. So that means people are bringing their investment to the country, right? That's how they're creating a demand. Tourism demand. So, apart from infrastructure demand, industrial demand, there are so many factors that we can keep on talking about. So that creates a demand, and that strengthens the economy, and which further strengthen the value of a currency. So when we're using a supply and demand as an indicator of where the price could be headed is easy. So as what it says, it's very easy when you understand the supply and demand as a major indicator, right? Because If you understand demand and supply as a major indicator, then you understand that where the price of that currency will go. And I think the best example to quote nowadays is the cryptocurrencies, right? Cryptocurrencies are not recognized around the world as a fiat currency still. It's a currency which is still yet to be recognized, and it's a currency which is yet to be associated with economic, geopolitical factors. You know, like countries are started to adapt cryptocurrencies. Like Korea has launched that they will be using cryptocurrency as their official currencies. Now that will put cryptocurrency in a different spotlight, because once the country started to recognize cryptocurrency and use it as a mean of buying and selling, then of course it create a different pattern altogether, right? So so the hardest part is to analyze all factor that affect supply and demand when you are trading on the currency pairs. You cannot actually understand or go deep into it and say what are the demand and supply factor which is affecting dollar or euro or GBP or INR or whatever currency pairs. But what best you can do as a trader is still you can understand the demand and supply by looking at the overall picture going on within that country, right? What are the current classifications which is actually coming forward through the president of United States, on different elements, right? That is what you will be able to roughly understand that will affect the demand and supply of the US dollar. What is Eurozone trying to do? Okay, what France is doing, what Germany is doing, what Switzerland is doing, and what and Brexit, for example, putting pound into a different situation right now is because UK was always a part of EU, was not a part of EU. So they always consider them as a part of EU, but they have their own currency. They have not adapted euro as their official currency, never, right? And they have opened the free trades for Europeans to come to UK without any visa. It's like we are going from one city to another city. Like for us, it's Europe is not a country. It's like a city. I want to go to France, I can drive down. Only at the border, I just show my ID, and that's it. No stamping, no nothing. What I want to go take there, what I don't want to bring from there, is entirely up to a person. So this is how it has been discussed between the countries, that this is how we will trade within the EU. But then comes the time when UK decided that I don't want to be a part of you, because somewhere it is impacting my economy, because by opening borders, a lot of people from European countries are actually coming to UK. They're taking our jobs, they're hampering our economy, they're claiming the benefit, they're doing XYZ thing, and we are becoming more and more debtors to the European countries because we're taking loan from them. So if we take UK out of the European Union, which we technically call it as Brexit. Britain is exiting from the European, so we call it as a technical word as a Brexit. That is affecting the pound, and that has affected the pound a lot, because when you come out, your treaty is finished with the European Union, then the European Union will come forward and say, "Hello, Mr. Britain, I have given you 100 billion pound loan that I want you to pay within 1 year." Because now everybody is coming hardcore. There's sort of talks which going on, and the discussion which has had happened. Of course, EU doesn't like that the UK suddenly decided to just go out, and they don't want to be a part of it, and they want to cut all corners with us. Even the European moving after Brexit, will not be allowed frequent visit to UK. They have to take a visa, and that has got approval. So now that all that trades that was happening, and all those a relationship that UK and Britain was sharing with each other has come to a brisk, because now they are not allowing anybody to do that. So they are taking their anger out of it and saying that, okay, I've given you £100 billion loan. We want it in a year time. Now it becomes difficult for Britain to actually arrange that 100 billion, because they're already going on into deficit, and now they have to arrange. That means they have to sell their terminal 1, terminal 2, terminal 3, terminal 4 to Chinese traders, take the money from them and give it to EU and say, hang on, you can go now. Doesn't matter. I am a friend with China. So these are the factors which are affecting the pound movement. Now, every trader right now is keeping an eye on Brexit movement, right? And you always have to keep up with the news, as I said, always, And nowadays with smartphone and nowadays with different apps, there's so many news channels available online. It becomes so easy for everyone to actually keep a full track of any particular country's economy. If you are only dedicated that I want to trade in GBP USD, which is pound versus dollar, and I always trade in pound against dollar, or I trade dollar against pound, at least I keep myself in connection with the economy of both these countries, because I trade in that and I know what to do. Because if this is going to happen, pound will weaken. I will buy a pound. I will buy a pound because pound will plunge down, against dollar, because this is what is happening with Brexit, and there's so many things going on, that of course the pound will currency will weaken, because, and it's very obvious, when all these things happen, that means a lot of things will be pulled out of the country, which was a part of that country, because they have a happy treaty with the European Union. When there is no more happy treaty left, of course, it's like when I'm fighting with my brother. Now we are living in one house, we are sharing everything, we are helping each other, we both have got money and this and that. And then suddenly one day I decided I'm not going to sleep with my brother, because I am not getting gelling along with him, or his family is bigger than my family, and his family is actually taking away the part of it, and I decided to cut the ties off with him. What will happen? He will then become angry, and he will hit my pocket straight on, because he will take all his things away from me. That will affect my economy, right? So in other words, you have to look at different factor to determine whose economy is rocking. Okay, we are not the biggest technical tycoons like Goldman Sachs, or Taylor Swift song, which has been into this market for so long, and their job is to do the technical analysis. We are just a normal trader. We cannot digest the entire in and out of the economy of any country. But even if you keep yourself in touch of what is going on for your fundamental analysis, I'm sure you will be able to make a decision on which side of the market you have to. Right. So people do give signals, people do give a lot of other things in the market, and we basically follow those trends, because nowadays it has become a fashion where there are, and we are also trying. The new feature that we are introducing on Moyo today is a signal. We're trying to help people to actually trade through the signals we're putting. That's good. That's always good. That if somebody is helping you to trade because you don't know how to trade, and simply want to make money out of it, and don't lose the money, you still need to understand the technical fundamental analysis. Buy or sell at the moment, depending on where the what news is coming in the market. Right. Then unemployment rates of any country plays a very, 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 very important role for the economy. First thing they do as economic analysis of the country always always. So people who are trading in euro dollar, they always look ahead, every month, that is non payroll. And the dollar just runs like anything, either up or down. So all the traders, they always keep an eye on the non-farm payroll report to understand what is happening with the unemployment ratio in US, whether the economy is going stronger or the economy is weaker, because they the unemployment data for the entire world, what is going on in US, and that actually gives a big clears a big picture to the trader where the dollar will move. And people actually within an hour the dollar moves like anything, and traders just wait for that opportunity, understand what is going on. That means if the economy, the overall non-farm payroll report is showing a negative number, traders will understand that the economy is weak and the dollar is moving so fast, and the sentiment is on one side, not on both sides, after the non-farm payroll report. These are the simple tips that you all have to understand while trading, on a currency pair. Every single thing. Like for example, if I go here and I show you, say, right now, Bloomberg is a good source of news. You can understand what Tesla is going to do in US. Is opening 500 branches across US, for example. That means more employment they will provide to the people. That means the economy will grow. What these people are doing, Apple certainly crossed 2 trillion capital, right? So who is now the CEO? His net worth has gone in billions dollar, right? And what he's doing, the shares of the Apple is moving because of various factors behind it that you always need to understand through these news. That means that will affect the the particular currency pairs. And once we start giving you stocks and shares like Apple, these news will also help the stocks and shares, because you understand where the market will go, what will happen to the Apple price. People who have bought Apple long time ago, suddenly it has gone up 20%. Tim Cook price shares, and same thing happening around. Apple shares have certainly gone up massively, and his net worth has become bigger himself. So you can see what factors are actually affecting, which you all need to understand. So this Bloomberg is the one-stop solution where it always gives you a snapshot of any particular, and it's just a five to 10 minute recap every day. When you sit before the trading, you understand, and everything is there, is given here, like commodities, stocks, rates. You click on currencies, you go to currencies, you will see all news related. If you want, you can search the news, and you can then make a decision, what's going on around the world, what Bloomberg news is coming about. And there are a lot of technical analysts also, which have the videos over here, which will tell you actually what to do on different sides. So this will eventually help you. These are the different side which you always have to keep in touch with, so that you can understand the stuff. So the idea behind this type of analysis is, if a country current or economic future economic outlook is good, its currency should strengthen. So I mean, this is very obvious. You all can understand that. If it's a good economy, currency value will go up. It's a bad economy, lower currency value. In a nutshell, that's how it all works, right? So let's say the dollar has gaining strength because US economy is improving, right? So that means as the economy gets better, what will happen? Interest rate will become better, which will actually control the the growth and inflation. The high interest rate make dollar dominated financial asset and even more attractive. Why? Because when the dollar becomes strengthened because of the economy is improving, then the many countries are buying, taking loan. They are selling it on a high interest rate, and that high interest rate is actually what is helping the um, to combat the inflation, because the more interest rate will go up, the inflation will go down. Inflation in any countries is very bad. If the inflation is high, then you can understand that the economy is completely shattered down, and the currency will start to weaken completely. Right? So these are the factors that you have to understand when you pick up any particular currency, and when you go deep into it, when you look at the different sources nowadays, there, as I said, there are many apps which gives you a snapshot of everyday snapshot on dollar, what is going on pound, what's going on. So it's not like you have to open a newspaper with a cup of tea and then you have to go through the entire financial segment in a newspaper to understand, oh, what will happen today. Those days are gone now. Today is the era of technology. Everything is in your phone. A 5 minute quick technical analysis or fundamental analysis every day will help you to make a better decision rather than relying on someone else or making your own assumption of a trade. Sentimental analysis is based completely on which side the market buyers and sellers are standing, where the sentiment is going. And sentiment basically is built on the perception of a trader. So if we all people who are sitting here, we think that dollar euro again will be bullish, that means it's the trend is towards the euro side. On their gut feeling, on their experience, so that the market is standing on one side, it becomes a sentimental market. Fine example is Bitcoin. If you look at the sentimental analysis of the Bitcoin, if you ask any second person right now on a street who is having a Bitcoin, you say you want to sell, he said no. You say why? He said because it's 11,700, it has touched 12,000, I want to sell. That's the sentimental of a trader. His sentiment is that this will go up, 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 and up, and touched up to $15,000. So I will be on a sell side. So the majority of the sellers have built on their sentimental analysis based on the market movement. Okay, they have not looked at the geopolitical movement. They have not looked at the economic movement. They rather have assumed that because this has happened, the market will move this way. Rather, we have set up our sentiment that we are either standing on the buy side of the trade or we are standing on the sell side of the trade. And then sometime you as a trader has to look at the sentiment and understand what is going on. There are many websites, basically, when you go on those websites, they will give you charts telling you the sentimental analysis of a trade. That means, what I mean to say is, if you look to those websites like Dow Jones, for example, when you go to Dow Jones website, you will look at the website and see they will say to you, if you select a currency pair euro dollar, they will show you 50% on the buyer side, 50% on the seller side. Then another currency pair, they will say 60% the books analysis of the FX, right? Because Dow Jones and all those, they get the data, the trading data. They are the big repository companies. So, there are certain companies which have an access to the entire FX data. So based on that data, they give you a sentimental analysis. Okay, so they see that there are 10 buy trades and there are 6 sell trade. So this is the person are standing on the buy side, right? And 90% are standing on the buy side, right? Or whatever, vice versa. This is what will further help you to decide what you want to do, because when more people are on one side of the queue, it's a mind game or mind perception. Why the hell I am standing on the sell side? Am I a fool? So sometimes we get carried away with the sentimental analysis trader as well, because that's how the trend in the market is, right? And there are different examples that I can quote for the sentimental analysis. I don't think you all know what the sentimental analysis is all about. If one fashion goes in the market, everybody follow that fashion. But a good trader always gauge all three things before making a trade. He doesn't only fit into sentimental analysis, he doesn't fit into fundamental analysis or fit into technical analysis. He rather see different angles. Yes, sentimental analysis is important because I know out of 7 people are on the buy side, that means definitely the market is going on a buy side. But just to cross check why market will go on a buy side, I need to do my homework as a trader, and I need to look at the fundamentals. What is going on? What will be the next move of that country? Unemployment ratio, what data is coming out, etc., etc., etc. Right? And then I quickly jump on the chart, look at the market trend, and decide where the trend is going, to cross check the sentimental analysis. That if the market is definitely going towards the buy side, if the historical data is showing plus the fundamental analysis is also backing it up, that means the sentiment in the market is right. To follow the sentimental analysis alone sometime will lead to the destruction as well, because you not everyone is right in this market actually. It doesn't mean that a big company like Goldman Sachs followed by everybody thinks they are the world best financial institution. I will also go the same way. They might be wrong because, for example, in case of oil, you never know. There are a lot of people who was quite bullish on the oil, and suddenly the oil price came down with a fraction of a second. What happened? Even the people who have a sentimental analysis of 90-10 on the oil has gone flat. So you cannot say, that's the thing. You cannot always, yes, you always follow the trend. That's right. Although I will say oil analysis, oil example is the extreme example. In the normal day-to-day trading, you can also go with the sentimental analysis of where the market is standing, but it's always good to cross-check the sentiment of the market by having a quick peep through the fundamental analysis and the technical analysis. Then you will probably be able to understand better and you will make a better decision. Now the $1 million questions comes in: which type of analysis for forex trading is say sometime that which side of the market is good for you, right? Because not every time we are right. One second, sorry. And everybody asks this question: which type of analysis is the best, right? So let's look at this focusing on only one type of analysis can turn into a disaster, right? So it's like, as I said just now, you cannot just say the sentiment in the market is buying, so let's get into that queue, which might also lead into a disaster. So let's go point over. Let's say you are looking at your chart and you find a good trend. trading for 3 days. This is what I want you to do. Then you get all excited thinking about the money that's going to be raining down the sky because you're thinking this is the best opportunity. I will buy euro dollar. I will take 5 contract size, and I'm sure because of the sentimental analysis or the technical analysis individually, out of the three analysis, I pick one individually, and I think this is it. I have never seen a more perfect trading opportunity than in GBP USD. I love my chart. Okay, now show me the money. You then proceed to buy GPUSD because you thought this is the best fine USD opportunity with a big fat smile, and you will tell your friends. And it happens when you trade. Sometimes people just come to you and say, I nailed it. I bought BTC USD. Buy. Price will definitely go up, and I will make money out of it. And all those sort of stuff because you has become so confident with that. All of a sudden, the trade makes 100 pip move in the other direction. Then then the news came out because you were following a sentimental analysis. And the other hand, on the GPUSD, the news came out that UK just gave on FUNE, which I was telling you about in the last podcast with you guys. And this is a very good example is because I was actually doing the analysis at that time when the Brexit was happening. People were sort of very dicey. Some people were saying Brexit, say no. Then everybody voted. Then the government came forward and asked the people, do you want Brexit or not? So we do a voting and we all voted. The result was 51-49. So 51% people said yes, 49% people said no. So actually the yes won by 1%, but that 1% has changed the entire economy and the direction of pound against dollar, right? So these type of thing. And if you look at this, you learn that it stands for the European Union, which is an economic and political union involving 28 European countries that allow free trade, which means good can move between member countries without. And suddenly everything was like we 28 countries, we are like brother and sisters. We don't have to involve in anybody's matter. We are going shoulder to shoulder, and then suddenly 51% people said we want Brexit because we feel as a national of the country that our employment is taken by the European nationals. So we as a British nationals, we are suffering. We have a very less employment because they are more skilled, and top of that, they are cheap labor. So people voted in favor of it, right? And that puts completely GPUSD on a back spotlight. Of course, when this sort of sentiment happens, the currency will, because people don't know what will happen. Then the government went to European Union. They had a talk to find the best Brexit route out without affecting the economy. But the matter went the other way around, where the European Union came really, really hard on UK, and they said, no, you started. First, you said you are a part of EU. You have not adopted euro as your official currency. We said no problem. Now you are coming to us and saying that okay, we want Brexit because people have voted, and you want to chuck all those millions and millions of European from Britain back to the EU, putting us unemployment back on us, right? And then you have taken loan from us as well on that side. So now what you have to do, if you're going to check our people out, then you have to do what I did earlier, if you remember. I just said, of course, the currency has gone down completely. It has gone against dollar massively. And that opportunity, this trader who was thinking it's a sell opportunity, he has taken a big trade because he thought everybody is on that sentimental trend side, everybody is selling, failed. And the disaster happened because the market went others way around, because at 10 o'clock, 10 p.m. UK time, when the news came out, the news broke out that yes, it's a hard Brexit. People who were on that sentimental side of buy lost a lot of money. And that big fat smile turns upside down, and you start getting, and those people start getting angry on charts because the chart was showing this trend. So I was actually following either a technical analysis, was only following fundamental analysis, or only follow sentimental analysis. That doesn't work. Market analysis to make money out of it. Sentimental analysis is fine, but sentimental side would have looked whether it will be a hard Brexit or it will be a soft Brexit, what will be the impact. And people have that judgment what will happen, because the news is everyday news where people have predicted, because the discussion is going on in parliament. We know that they're not coming to a consensus that it should be a soft Brexit, and we know that it will happen. Even though people follow that sentiment, they thought, no, I think these people are right, because if the queue is very long, there must be some going on there, so I will go and follow that. That leads to a disaster. So for a trader to come up, to sum up, I think it's very, very important that as a trader, you all should follow all the three technical analysis. I think this is enough for the day, for all of you to understand, because fundamental analysis, technical analysis, and sentimental analysis, I've given you a full snapshot. You understand what is this all about. Now, when you go back and just think and let all of this information digest in you, and then what you do basically is, as a investor or as a trader, you always have to have, if you want to make your career, look, I say very often, FX people have made loads of money, people have lost loads of money as well. But I keep on saying, people who lose money are those people who doesn't do their homework properly, and they just, if you come and do your homework properly, if you come and you trade properly, you do your checks and balances properly, trading is very ethical. You have to follow it as you follow any business. You cannot open a business, you cannot do a business, you cannot open a food stall in a deserted area and you think somebody will come and buy it. Then it's a wrong decision, right? You people, then the business will flourish. Same goes with the FX side. You have to have a discipline. It requires a lot of discipline. But once you follow the discipline, once you follow the factors, once you follow the steps, I'm telling you, with no time, you will judgment of trade, right? So once again, thank you very much, everyone, for listening to me in today's webinar. Tomorrow, as I said, I think tomorrow on Thursday, sorry, we'll do an Urdu webinar. So tomorrow we'll fundamental assets. This time we'll do the session through charts for you to understand how to understand the charts, and to sell limit. What does that limits actually does? What is upward trend, downward trend, sideways trend? All these things we will understand. Hope you guys are liking it. I apologize that last Friday I was not able to do the but anyhow, this week we will definitely do a Q&A session, and whatever we have from last week, I will do the session, and I will just dedicate 1 hour to for Q&A session, so that anybody but keep in mind only focusing on the FX side, please. Yeah. So anybody who comes for Q&A, only focus on the, and we'll take the question one by one. So with this, I will take your leave. Thank you very much for listening. And before I go, I will let everybody know that on the platform, whatever signals, and for now we are giving signals free of cost to all our customers on the Moyo platform. That's a very unique tool we have built, which I don't think so any platform offers. They offer signals free of cost to all our customers, looking at the signal. So we have come up with this idea, and I think this is a very, very amazing idea. To be honest, I feel that this will put us in a different spotlight altogether. This will help all of you to trade as well. So at least you will get signals from us as well, which will help you to make much more informed decision. And at least we are trying our best to help our community as much as we can on the platform itself, so that they can put a trade. Because if you want to trade and you really don't know how to trade, at least those signals will put you somewhere at least, right? So yeah, I think this particular module is going live today, hopefully by the end of the day. And from tomorrow we will, when you open your platform, you will see signal section already integrated on Moyo website. But we are just testing few things, and once it is all tested, from tomorrow you can start executing those trades as well, right? And many more things to come. We have stabilized the platform more. We have added more, cushions to the platform in terms of stability and stuff. That's what we have done last week. So this week, coming week, we are adding uh, 2 3 new feature. One is, we, apart from MT4 account, now we are also opening Moyo agent account. So anybody who wants to trade with Moyo without using MT4, they are welcome to use that, because we are starting new packages there. We're starting new application forms. You can open a Moyo demo account. You can open a Moyo live account, right? And then you can trade through that, right? So we will keep on updating you as and when. And yeah, goodbye.